All right. Good morning, traders. Happy Saturday. It is September 27th. I'm Melissa. Of course, if you have been subscribed to the channel for any length of time, of course, you know that as I always introduce myself, but it's a habit. So I guess I'll continue doing it. I hope y'all had a great week trading last week. I took some losses in a couple of names, took some wins in a couple of others, day traded really well last week. That continues to be my focus, but I am getting more and more interested in some higher allocation, meaning the percentage of my account that I'm going to focus on swing trades. It's not where I'm switching to my 80/20 rule and going to have 80% of my attention and money in swing trades, but I am starting to see a little bit of possible sector rotation out of the big tech and semiconductors and the things like that and into more defensive areas of the market. Believe it or not, we actually had 3 days down last week in the S&P 500. It's been a while since we've seen that. So let me share my screen real quick and we will get started with this swing trade actionable ones that I'm going to be looking to trade this week. Good morning, Mike and James. Good to see you both. Hope you're having an awesome weekend so far, although it just started. All right, so here's the 3 days down that we had last week. And then yesterday on Friday, we did see a bounce up into the bearish golden pocket here. And price did stall at the 618, the golden Fibonacci level. Price would need to get at and above 6706 for me to be of the mindset that we could take out all-time highs. So 6706 important level in the S&P 500s here. As far as my buy zone that is fresh, it's sitting down here at about 6,600. I'm just going to call it 6,600 by 65.35. You can see the daily 21, these white dots on my screen. They're lining up with that buy zone. So, on further weakness next week, let's say that we have a couple more days to the downside in this zone is where I am really looking for swing trade opportunities. You can see I have an alert on my chart at or around that 6600. That's just going to tell me, hey, the S&P 500 has finally pulled back to its daily 21 and daily buy zone. So that's how I am looking at the S&P 500 on the daily chart. We created a sell zone. A sell zone for me is after a pause candle, an inside candle. This candle closed inside the body of the previous candle, and then we got the move down. That created an inside and down, which equals a sell zone. And so I really need an alert here on the chart at that sell zone because what that tells me is if I am in um, swings or day trades to the upside and it is getting close to the sell zone, that's like, oh, yellow flag. You really need to watch your positions and just make sure that we're not going to get an immediate rejection at that 67 20 area right there. All right, so I have my alerts on my daily chart for the S&P 500 now. That's how like to start out every week, knowing the major levels that I'm really looking to act upon. All right, so let me get started talking a little about where I am seeing strength or some slight areas of weakness and possible some sector rotation going on over those 3 days down. All right. First off, let me just start out by saying gold miners, metals and mining, they continue to just to the upside, 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 upside. Any dip on those names is a buyable dip for me. Now, I've been trading those names, I've made profits all year. And if I take a loss because a dip keeps on dipping, well, that's part of trading. But for now, gold miners, and metals and mining is the strongest area of the market, the strongest sectors in the market on a year to date look back, three over the last 3 months, over the last month, strong, a lot of strength. So you can see on this week's watch list, bullish watch list, I'm going to have those type of names on here. Then let's talk about some of the leaders. Semiconductors, off and on this year, has been the strongest sector, but it did show some weakness into last week. So I'm going to keep my eye on that. I do not have any semiconductor names on my watch list this week for swing trades. Now, if the S&P 500 gets down into this buy zone, that would be a different story because I would want to look at names like Taiwan Semi or Broadcom, Nvidia, MU, names like that, that I could possibly find a buy zone there and swing them into the end of the year. But for now, right now, the data I have right now, we're not down at that key buy zone. So names like those are not on my watch list this week. All right. While we're in this kind of transition phase, either we're transitioning for further downside or this was simply a buy the dip opportunity down here at the lower weekly edge, and we continue pushing right up through that sell zone and making new all-time highs. All right. All right. What else am I seeing? Communication sector was on my list last week for strength, but over the last month, the last 30 days, and the last 5 days, there's some weakness there as well. Also, the technology sector. It had been strong, and we're showing some weakness over the last 5 days and 30 days in that sector as well. So, no communications names on my chart or my watch list, rather, and no tech names on my watch list either. Good morning, Anna and Mignon. Good to see you. So that is where I saw obvious, maybe temporary, but nonetheless, some obvious weakness, some obvious they were so very strong, but they showed some weakness over the last 30 and 5 days. All right. Where did I see some strength in the market over the last 30 and 5 days? Meaning on koifin.com, those sectors that were towards the bottom that are inching their way up towards the top or the stronger sectors. That would be XLU. I don't know if you watched last week's live session, but I talked about, hey, XLU looks like it might be gaining some strength. And I put a trade on in XEL because of that. And actually, it hit my target, and I exited and told the trendy room at Simpler Trading. By the way, if you don't know, I trade live every day, Monday through Friday, in the trendy room at Simpler Trading. Join me in there if you're interested in watching and learning. The trendy methodology. I trade with my trading partner, Trendy John, who is my mentor, who taught me trendy strategies to trade the market. And we'd love to have you join us there. I'll put a link in the description of this video so that you can come on in for 30 days. It's a $7 trial for 30 days, guys. All right. But let me get back to XEL. I started a trade down here in XEL. The levels that I gave you last week, they worked out and we got this big, huge push. I exited here on this big candle as because it hit my target. I got out and now I have a watch on this name for this week to buy the golden pocket pullback here. Alert set, looking to buy. You can see the risk on this trade is about $1. And the reward here is the first area that I would be looking to take profits. It's almost $3. So great risk to reward there. But I would need a pullback. I am not a trader that buys on highs. I am more of a dip buy trader than a momentum breakout trader. So this is what I'm looking for on XEL for this week, a potential new swing trade. All right. All right. So utilities indeed saw some strength into last week. And XEL is a utilities name. That's why I mention it. Another utilities name that I am interested in watching this week is Dominion. Now, Dominion is obviously not at all-time highs. They're all the way up here, but it is setting up with a nice potential very close to a place that I would be looking to get long because of a trendy edge and because of this consolidation in here and then the imbalance candle up. Now, obviously, we have an imbalance candle back down. Guess what? That's where I would set my first trim right back up here. So I need to look and see, does it have a good risk to reward? All right. The risk on this trade would be about $1, just under $1. And the reward would be about $1.40. So that's the first trim reward. That does meet my criteria on that first trim. I want it to be at least 1 for 1. Um, anything up less than that is a no go for me. Anything more than that is a go. So now let's look at the ultimate target here. You have a lot of consolidation in this area. I have a trendy edge in this area. That is the next target for Dominion Energy. All right. Then, if I look further to the left, and I got to go back some time in order to see an area above that $62 range. So, I'm just going to keep that in mind, the 62, and I'm looking for some price action up in here that would be the inside and down candlestick pattern. And right there it is. So you see the area of consolidation, the inside and down candlestick pattern right in here that's above that 62 level that I found in current price action. Now I'm just going to zoom out a little and look at all of the consolidation. I want to find the top of it up here because that's going to create me a target zone to the upside. All right. And I like to make those sell zones red up there. I'm going to go out to 2027. That just pushes my drawing to the right so that all next week, next month, what have you, that zone will be on my chart. That's why I changed the date there. All right, so that's going to give me a trade plan right there on Dominion. I have a risk of about a dollar. First reward is about a dollar 40. Then trimming again up here at the upper monthly edge, which is 62.08. And finally, my target zone 63.31 to 65.24. So that would be my actionable plan for Dominion. Now, my stop is a daily candle close below 58.80. I have a lot going on right there at my buy zone. Obviously, I have the inside and up candlestick structure, which I love. I also have a yearly edge, the daily 50, the daily 21, all sitting right in here, and the lower weekly edge. Now, if you don't know, I'm here to tell you that on a dip into a buy zone that has been tested, because it was tested Thursday, on a dip into a buy zone. I wait for confirmation. I go down to an hourly chart and I'm looking for higher lows. You want more details on that? I will send you to my video waiting for confirmation in a buy zone. You can find it on my YouTube. That's a great video to watch to see how I protect myself from catching falling knives. All right. And I use that for all time frame charts. But on in this case, I would use it on Dominion. I'm trading off of a daily buy zone. I would go down to an hourly chart and wait for higher lows and then other things. But watch that video, you'll find out. All right. So that covers XLU and the fact that there has been signs of some strengthening in that name. Another name that I had on my watch list last week and I just didn't get the pullback to my buy zone, but financials are showing some signs of strength, and I left the buy zone right where it was at for Bank of America. My alert is still sitting there. I still like this buy zone. The risk to reward is still acceptable for me. This is about a dollar 40 of risk, and I have about $2 reward to the first target, and obviously much better than $2 to my target zone. So, Bank of America stayed on the list. I just didn't get the pullback I needed last week. No trade on BAC there. I also added Citigroup. Let's look at this name and see just what's going on. Number one, it has nice positive stacked EMAs. I like that. Obviously, if I'm trying to go long and swing trade something, I want a good looking positive stack of EMAs. You can see all the pullbacks to the daily EMA cloud have been by the dip opportunities on this name since probably April. If I had to guess, would go back. Yeah, since April. Any pullback to this daily cloud has been by the dip opportunity here. It is it created a baby inside candle and up candle. Not a big, explosive, powerful move. My upper weekly edge would be a target there at 104.98. A pullback into this inside candle here would be my buy zone. So that's going to be just under $2 of risk. And to the upside, it is just under $3 of reward to that first target. So that obviously meets my criteria. Now, I need to mention here, I'm giving you two different financial names that I am watching this week. It's very important that you understand that I wouldn't get in both of these trades at the same time. If I'm in, let's say, Citigroup, give me 1 second. Sorry. If I'm in Citigroup because it has triggered a buy and I'm in this name and then Bank of America triggers a buy, I'm not going to double allocate in the financial sector. All right. Because it is not one of those sectors like gold or metals and mining. It is just giving me signs that we could see some more upside in it, but it's not one of those, golly, it's on fire type sectors. So, no double allocating for me in this name. Now, obviously, it's up here, not at all time highs, but near all time highs. One way that I can look at this is just draw this line and extend it out to the left. All right. And then take my cursor and move it over. Well, heck, let's try that again. All right. Take my cursor and go, 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 go until I see candles up near here. And that's how I'm going to find my sell zone. Woo, got to go way back. All right. All right, now I'm looking for inside and down candlestick structure. It is way, way up here. So I'm going to take the extremes of this zone, both the low extreme and the high extreme, and that's going to give me my target zone on Citigroup. All right. Look at that, all the way back to 2008. Everybody knows what happened in 2008. Whew. All right. Citigroup, you go. Nice. All right. There we go. All right. Now I'm going to go back to current, not 2008. Hopefully, we don't go back to something like 2008. But there we are. All right. So I have 104.98, 112.10 as targets. $8 is a lot of price action before taking a trim. So look at this thing moves about $5 a week. So what you can do if you want, you can just run some fibs from that target down to the entry. And I love the 618. So I could set that as a target in between that zone and my first target, and that's going to be 108. So remember what the weekly ATR is. That's going to be about right. So that gives me one, two, and then a final target on this name on a dip buy back to my buy zone. The stop, let's talk about the stop. You know, a lot of people, hedge funds included, or bigger money, right? They will use this daily 21 and it's often a magnet. So am I okay? Does this setup work if I add risk to the trade right now? Now, understand this daily 21 will keep climbing the path that it has been climbing for the last quite a while. It started its up move back here at the beginning of the month. So it'll gradually go up, and ideally, when we get in the trade or when I get in the trade, the daily 21 would be up here towards the bottom of my buy zone. But if it isn't, just know that if it's close, I will typically use that as my stop rather than the bottom of this zone. It's adding some risk to my trade, but I trade with an allocation amount on every trade that I'm comfortable with. So it's not that big of a deal. Give me 1 second. All right, sorry. Needed some coffee. All right. So that's what the trade plan would look like for Citigroup. Now let's look at Cleveland Cliffs. Now we're getting into some of the metals and mining area of the market that I absolutely want to be a buyer of. Even if this is the dip that keeps dipping in metals and mining, that's okay. So I want to draw your attention to this imbalance candle here, and it came after a pause candle or an inside candle. You also have an inside candle here and then an up candle. Inside of this area, you have the lower weekly edge. You have the daily 21, last week's lower weekly edge. This is my buy zone here for CLF next week, potential trade. All right. I got a lot of influence in here, so that makes it a buy zone for me. All right. Good morning, John. Good to see you. All right. That's my buy zone. That is 60 cents of risk. Here is my first target. That's the upper weekly edge. That's about 70 cents of risk. So it's better than a 1 for 1. But let's talk about next targets. Again, I'm just going to look left. We're above all of this noise right here. Here we go. It's going to be right up in this area. This is where price is currently at, and I already have a trend there. That's why I'm ignoring this swing high. All right. And I'm going over to this price action right here. All right. Ignore this because that's where price is at, and I already have a trend there. This is where I'm focusing. All right. You have the inside candle and a down candle right in here. All right. There and there. Now, I believe I have a level already right at or around 1310, but just in case I don't, I'm going to leave that as the bottom of my zone, and then I'm going to go up to the body in case I already have a line marked at or near 1310. All right. So this is my sell zone. Now Cleveland Cliff doesn't have huge ATR. So it might look like, oh gosh, there's nothing there. Well, that's why it has like less than a dollar risk. All right, so 1310 was not there. So I'll remove that second line. All right, so this is what my plan would look like for Cleveland Cliff. Again, 60 cents of risk, about 70 cents, 71 cents to my first target, and then two $1.60 $1.55 to be exact, and then obviously great reward up there at 14.34, almost $3 on a 60-cent risk. So that's what the trade plan would look like. Again, notice though, you got a daily 50 and the bottom of the daily cloud that would add about 17 cents of risk to the trade. These will continue sloping up. So hopefully, when I get into a trade, it would be more towards the bottom of my buy zone. But if it isn't, just know that I will, if it's just a few cents, I will use the bottom of that cloud and that daily 50 as my stop. Okay. You also have a lower yearly edge down here that I could use as a stop as well. All right. So that is Cleveland Cliffs. We've already went over Dominion. Let's talk about the sector itself, GDX, which is gold miners. I've already told you this thing is on absolute fire. All right. Absolutely, positively on fire. There's a couple of areas that I would be interested in for a pullback. The obvious one is down here. That's a daily 21. That's an imbalance candle followed by strength. This is the bottom of that pullback there. This is not an inside and up candlestick structure, but I'm using the key EMA and the bottom where then we had a nice rally up to new all-time highs. All right, so that's going to be my buy zone there. Now, you do have an inside and up candlestick structure before this pullback. All right. And that is right here at your lower weekly edge, at your daily 9 EMA. This would be a smaller, right? I could put the zone up here about 55 cents above, or I can just use this body. This would be a very tight risk of $1.12. It lines up with the lower weekly edge and it lines up with the daily EMA. If I were to take this zone right here, it would not be that big of a pullback. It could happen easily in one day of weakness. All right. So I have two different zones, either this one or this one. If this one is stopped out, then I'm patient and wait for this zone here. All time high is obviously going to be a target, right? Or move it down to the weekly edge right here. This would be buying off of this zone right here. But understand if we pull back to this zone, there's going to be inside and down candlestick structure up in here. And so my targets will change for buying from this zone. All right. But we're going to talk about this top zone first. So this is the first buy zone. You have about $1.12 of risk. You have about $1.81 of a reward. And then obviously we need further upside targets. So I'm going to use Fibonacci extensions from where this move began up to the all-time high. And that's going to give me some extension targets to the upside. I typically will use a level in between the plus 236 and 382. Then I mark the 618 and then I will mark the 100 to get my extension targets. Okay. So that's what some extension targets would look like on GDX. All right, now let's move on down to gold, which obviously is also absolutely positively on fire. Had this on my watch list last week, didn't get the pullback. I actually adjusted this buy zone on gold It was down here before we made that new all-time high Tuesday, I believe. So this is the buy zone now for GLD. It's 330, 876 by 330, 258. That is a risk of $6.18. As far as the reward, it's just under $10. Good risk to reward, extension targets above. Um, Alert set. Do we get the pullback? I don't know, but if we do, I'm a buyer of it. Okay, for GLD. All right, let's talk about Halliburton. But first, before I talk about Halliburton, I need to talk about the fact that oil and energy is showing signs of some sector rotation. What I mean by that is XLE, XOP, and OIH. All three of those sectors showed relative strength, not relative strength, but signs they're moving up on the list of they were much of the year all the way down at the bottom. They look like caca, okay? But they're starting to move from all the way at the bottom. They're getting in the mid tier for a 30-day look back, a 5-day look back. They're up at the top. So I wanted to put some names that are in that area, whether it's oil explorers, production, or just straight up energy names. So there are some of those this week. Been a long time, but there are some of those on that I will be watching. All right. One of those is Halliburton. Now, I am a longtime shareholder of Halliburton, and that trade is one that is in the trendy room. We have set through, golly, what feels like eternity in this trade. I got into this trade that I'm talking about, Halliburton, in March. So look, in March, okay? It's been a long, long time. A long, long time. All right. Got a nice move. The 21 got crossed over the 50 during this consolidation. Boom, breakout, right? Boom, breakout. Don't get super excited because we're nowhere near. This is a lower yearly edge for my trendy members that are in here. You will understand that means this thing looks like caca, right? But I'm just looking to play it on this recent strength, potentially if I get that pullback. I'm not buying, I'm not a buyer up here where price is currently at. Well, I already own shares from down here, but I'm not starting any new options positions there. Okay. Why? Because look, here's your inside and down. You see that touch yesterday, and you see that obvious rejection at the touch of this supply or this sell zone. That's why. All right. So rather than get cute and try to buy up there at recent highs, I'm waiting for a pullback. But I want to have some targets above here for us to play off of. And I'm going to do it just like that. And I can really, so this one's already been tested. I will color this red. This is an obvious inside and down candlestick structure with making it a good target zone for Halliburton on a swing trade. All right. So that's going to be red. Here we go. Let's go back. Looks good. Now, what am I missing? I'm missing my buy zone. All right. Why do I like this thing? Well, we've spent forever below the 200. We popped above it We had a little pullback, buyer stepped in, we hit that sell zone, supply zone, whatever you want to call it, resistance. We got a rejection there. I would love to see a day where we pull back to the daily cloud, the 200, the lower weekly edge, lower monthly edge, all in this area. You see the consolidation, then your breakout. This is my buy zone. Okay. And then I'm just going to use the bottom. It looks like here or this wick, either one, what have you. $1.50 risk. Okay. And 26 like that. All right. Now I can leave this right here, or I can be more conservative and bring it to that upper weekly edge, which is what I'm doing. All right. As far as reward goes, that is $2.30 is what I'm going to call it. Okay. As far as risk goes, that is $1.50. That beats 1 to 1 on my first target. And this definitely is, that is $4 to $6 up there. 4 to 5, sorry, $4 to $5 a reward somewhere in that vicinity, and my risk is less than $2. So, yep, meets the uh, criteria for my risk to reward. So that's what I like. This is my buy zone. Here's my stop. That would be a candle close below. And here's my first target, and here is my second target for Halliburton. All right. Now let's talk about IREN. I got IREN from the Innovator or Buzz sector. I forget which one it was on. But FFTY is the Innovator sector, and Buzz, BUZZ, is what's buzzing right now, right? So I went to those two sectors just to see if I could see any potential good setups that I could look at trading this week, and IREN came up. All right. My buy zone is down here. We consolidated. We had an inside and up, consolidate, inside and up, then a gap up, then this move where we made a new all-time high. A pullback to this area would be a buy the dip. I also like it. The daily 21 is in there. So anywhere in this range, or wait for the deeper pullback, because we did consolidate here though, and then we shot up. I'm going to make this zone this wide on IREN. Yes, it is $6.30 approximately wide. My reward though is better than that. So it's a trade for me. All right. If you're not comfortable setting through a risk like that, and remember, I'm going to wait for confirmation. I'm going to scale into this trade. So half allocation here, half allocation here, looking for, I'll take, because this is untested, I'll take this one on the touch, half allocation. Then at the add, I'm looking for higher lows on the 1 hour. All right. So just so everyone knows, this must stop down here below 30.47. All right. Inside and down, there's a target. First target, I'm going to move this one just a tad to be at this upper weekly edge, and that's a second target. All right. If we take out the all-time high, I will draw Fibonacci extensions, but for now I have two targets, and that's what I need to have a viable trade plan. All right. So that is or would be my plan for IREN. IWM, I got into this was another trade that I shared last week, the levels to buy. I just got a starter position on IWM. For me, that was only one contract, and we hit a target. And with the overall market kind of in no land, kind of just, I don't know. It doesn't know what it's doing. It feels like I don't know what it's doing. I decided to take the profits here at the first target, put it back on my watch list, and it is the exact same zone, guys. Okay. So all I need to do is remove that, which told the trendy room that I had exited for profits there. And we're back here to trade this zone again. And this again will be a trim and a trim. And we're just going to make us a target right here. Okay. Boom, boom. You see the inside and down, right? That's why it's a target. Obviously, last week when I set this plan up, there wasn't that inside and down. That occurred during this week's price action. So now I have a target zone up here. All right. All right. Very cool. All right. Let's look at Kinder Morgan. So Kinder Morgan is another KMI energy oil type of name. So obviously, if I'm in Halliburton, I'm probably not going to be jumping on Kinder Morgan. Um, that's important for you to know. I got a spaghetti bowl of the EMAs over here, but they're all trying to positively stack. All right. That makes the lower yearly, or is this upper yearly edge? Maybe that's upper yearly edge, which is crazy. But that makes this edge, that daily 200, my buy zone, just above the lower weekly edge. Then I'm going to take the low of this consolidation that occurred, and that's going to be my stop. And that's going to include those other key EMAs in there, right? Those other moving averages, they're all in my buy zone. I have a lot of confluence here to buy the dip. If the dip keeps dipping and I stop out, so be it. That means price coming down to here, FYI. Actually, there. Mm, there. Okay. So, target, upper weekly edge. Now I need to look left to find that sell zone. Oh gosh, you see it there, right? Boy, that's going to be right at where the upper weekly edge is at. So I'm just going to leave it like that. Okay. There to there, there to there. And if you want a target in between, that's what I'd do. I'll run fibs. Boom. Oh, the 887. All my trendy fams should know the importance of that target right there. Y'all know, right? Come on, I see y'all in here. Futures floor. Good morning. I see y'all in here, so I know you know the importance of the fact that this thing closed above the 618 and why this would be my target, right? We're not going to share all of our secrets, but that's a powerful one that I showed over and over uh, yesterday day trading. Two amazing day trades using this hack that Trendy John taught us all. So, thank you, John. If you ever watch this video, thank you for teaching us that. That makes up my target, guys. So, this is the, oh, bummer. This is the plan. Here's my buy zone. Here's my stop. Here's my first target, and that's my target zone up there. All right. That would be KMI. Now let's go back to a absolute leader sector, XME and gold. Okay. Newmont falls into both, FYI. Here is the first target. Obviously, I'm not buying it up here because I don't do that. You can play this little area right in here, but really I'm more focused on this move right here on Newmont. Okay. I'd need a pullback to about $79 by 77, couple dollar pullback there. If I get it, I told you that 82.23 is a support area. Well, guess what? If it pulls back to here, what was support becomes resistance, and that would be a trim, and that would be a trim. This is my buy zone on NEM, Newmont Mining. All right. But again, you got a lower weekly edge and the 9 EMA all right here at 82.23. What I would do if I wanted to play this lower weekly edge this week, I would do it on an intraday chart. Okay. This is my focus. This would be a trim, and that is a trim. And then if we take out the all-time high of 86.62, guess what? I'll draw Fibonacci extensions to find next target. Let's talk about another oil name, Phillips 66. Positive stacked EMAs now. You got a very obvious buy zone, or it's very obvious to me. It's from right here, okay? Right there. All right. Then I also have a very obvious first target to me because I got a lot of trendy edges all stacking together. Just like I have trendy edges stacking together down here at my buy zone, I also have them here. Remember, oil has been weak, so I am using this lower zone. I'm not using the 9 EMA on the cloud. I'm not even using the 21. I'm using a quick pullback to there, and then I go long. Then I'm going to come down here because that's where I would add to the position. All right. This is my stop. I've got about $5.50 of risk. This is my target. I got about $10 of reward. Good risk to reward. If I get the pullback, I don't know if I get it or not. I want a target zone though, and that's going to be some price action above that yearly edge mid. And it's going to come right here, clear as day, right there to, sorry, trying to get the top there. There. Okay, 145 to 150, basically. That's what trade on Phillips 66 is going to look like for me next week if I get my entry. Okay. Now, again, I have to reiterate this. You know why I'm reiterating this? Because I freaking blew up an account being over allocated all in one area of the market. It wasn't oil, it wasn't energy, it was tech. And I say I blew it up. I didn't go to zero, but I lost way more than I should have because I didn't understand correlation whenever I was a new trader. And I was just long not hundreds, but about 8 different tech names that woke up to a big old downturn and a downturn in my account. And I'm not doing never, ever, ever will I do that again. So I will remind all of you every single time I'm talking about something like this because I don't want the same thing to happen to you. If you've never experienced it, you just cannot imagine whew, what it feels like. So, if I'm in an oil, an energy name already, like say I'm in Halliburton, I'm not jumping in Phillips 66. Say I'm in Phillips 66, I'm not jumping in Kinder. All right, that's what I mean. Rocket Lab, this sucker, let me tell you, man, I still haven't entered it. I got to pull back here. And actually, if I go to the 1 hour chart, I got a higher low, but I didn't feel right about it because here is no, where was that higher low? Did it happen Friday morning? I think so. Here, higher low, breakout. Why didn't I feel right about it? Because it was coming straight up into this resistance here. And I'm like, golly, it's just not giving me what I want. So I held off on it. I left it on my watch list so that I didn't forget to talk about it. But I'm going to talk to you now about there's better looking setups on my watch list for me to focus on than to keep watching this name that has now closed 2 days below the 21, 1 day below the 50. Yes, it's in a buy zone. No, this buy zone is not fresh. So that's what I wanted to talk to you about, just in case you watched last week's video and you're wondering why I didn't buy that zone. I wanted to explain to you why I didn't buy the zone. And if you're in the trendy room, I wanted you to know why I didn't buy that zone. All right. So I am taking Rocket Lab off my list now because there's better things for me to look at. Sure, Rocket Lab might zoom out of this buy zone and Melissa missed it. And that's okay. I'm just going to go with some other names to focus on rather than Rocket Lab. All right. So bye bye, Rocket Lab. Let's go to SoFi. This is from the Buzz and the Innovator sectors. I think it might be on both. I'm not sure. All right. Lower weekly edge, daily 21, inside and up candlestick structure, all looking great right here. All right. So inside up, gap up, came back and tested on the 17th, 3 days up. Now, 1, 2, 3, and 4 days down. Okay, on SoFi. Trendy John teaches us in the trendy room that the market moves in cycles, typically 2 to 3, and then you get a day or two of consolidation. Really, we could call this day consolidating because it closed inside the body of that one. So that'd be 3 days down, a day of consolidation. Does the trend continue to the upside? I don't know. Neither does anyone until it happens, unless you have a crystal ball that tells you this. All right. So, a one possible entry is 2742, or wait for this area in here. Up to you. I'm going to show you both the lower weekly and this zone right in here. Now, typically, I would go under the body of that candle, but I'm using the top just because I want to use last week's lower weekly and I want it to be closer to the daily 21. So for me, this is going to be the buy zone on SoFi if the market seems weak at the beginning of the week. If the market seems strong at the beginning of the week, I will start the position here and add in this buy zone. Okay? As far as targets go to the upside, upper weekly is going to be that first target. Then I don't have a target above there because there's the all-time high. So I need a target above there. I can just use from this the move from this buy zone up to the all-time high. And I do the same thing every single time, guys. There, there, and there. Remove. All right. So let's take a look. If I buy in this buy zone here, 26.55 to 25.30, that is a dollar 25 of risk. Way more than a dollar 25 of reward, right? If I buy 27.42, then my risk is now $2.12, and my reward is about a 1 for 1. Either one of these things can happen. I explained when, what, why, how it would change. Okay. For me, strength, if the market's looking strong at the beginning of next week and I get a dip here, I would start a position half allocation and add in my buy zone. If the market is looking weak at the beginning of next week, then I'm letting this go and I'm focusing on this buy zone, starting a position here, adding to the position here, and the stop goes below the 25.30, assuming that this daily cloud is up in there. If not, I'm going to increase that risk a little. Okay. All right. That's SoFi. TSLL, I'm a long term shareholder. Hold on 1 second, Cece. I'm a long-term shareholder of Tesla. Long term, long, had it a long, long time. Okay, but it is the talk of the town. Let me tell you how I like trade options on Tesla. It's called TSLL Leverage ETF. It has a buy zone right here. Dip into this zone would be a buy. There's your trim. There's your target. This is going to be all-time high, I think, on Tesla up in there. Okay, so TSLL, I'm going to put on my watch list for a potential swing trade. All right. All right. UEC, this was another winner for me. I said that I would, it was a winner right here. I said that I would look to re enter the trade on a pullback. That pullback's right here. Here's the reward. The risk is a dollar 14. Yeah. Yes. $1.14. Reward is $2.30. Good risk to reward. As far as extension targets go, let's just run from that zone to the high. Let me give you some extension targets on UEC real quick. All right. There you have it. So I will be watching UEC for another dip buy. That's what we did here, there, rinse and repeat. Wells Fargo is my other financial name that I'm interested in watching. Here's my upper weekly edge. That would be first target on Wells Fargo. You see the pretty obvious to me zone, right? Inside and up, but not a real strong move up. So although this could be looking nice to buy a lower weekly edge and then use this bottoming wick here, it's not my favorite zone to buy on this name. This would be my favorite zone to buy on this name, but I'm going to put both of them on the chart. Okay. Bank of America is what I'd rather play. But we'll see if I get a BAC entry this week. I didn't last week. I'll watch it again, but this would be the earlier entry on Wells Fargo. This is first target. As far as extension targets go, um, I'm not going to measure this whole thing. Banks have earnings coming up in about 3 weeks. Just know that. This would be a run into earnings type play, right? And here's some extension targets. If I'm in profits and they're paid for and I'm good with the risk and I'm still in a bank name before earnings, I will remain in runners through earnings. If I am sitting on a trade that's done nothing but just sit around and chop, I will probably cut it before earnings. Okay. Because it could go either way. It can always go either way. I understand that. But if I'm already in the trade and it just isn't doing anything, I'm probably going to just attempt to get out at break even. Okay. CC asks, as in Rocket Lab on the 4 hour charts, besides higher lows, what other indications would we look for an entry and an edge? CC, that buy zone that I gave you last week, right? It's still a buy zone, but Rocket Lab keeps stacking resistance right above that buy zone, and that's why I'm passing on it. If you go down to a 4 hour chart, I go down to an hourly chart when I'm looking for higher lows. It couldn't even perform well on the hourly candles. So I'm certain that the 4 hour candles aren't looking any better. But the buy zone is still the buy zone, CC. Okay. And I know you're in the trendy room, so that chart is still in the notes section, I believe. Let me make sure. Maybe not. Yes, it is. Yep. Chart is still there. Go ahead and save that chart, CC, because I will be deleting it after this video so that I can put the new charts in. Okay. All right. Let's cover WMB. And I've already covered XCL, I believe. If not, will do it again. Uh, Here is WMB. I love this buy zone right here. That's my buy the dip opportunity on this name. If I get a dip back to $60.18 by 59.18, I'm wanting to buy a dip right here. Okay. Targets. There's your first target. That's the upper weekly edge. And further targets are going to be, you guessed it, extensions. There you go. All right. That would be my plan for WMB. This is the stop. This is first target. You can see the risk to reward is there, not an issue at all. And then extension targets, XEL, just in case. I told you I took my profits, right, at my target, but this is the pullback I'm looking for. That's a golden pocket pullback from this big, nice rally that we capitalized on. You did create an inside and up right here at this bull channel. So, hey, you want to play this one aggressively to for a pullback 77.62 to 76.52. That would be the aggressive pullback. Still, here's your first target because that's an upper weekly edge. Then extension targets above. All right. All right, guys, that wraps up the list that I'm looking for. I will pick 6 of these names that I'm going to share with the trendy room, and put those charts in the notes section for y'all to check out. And yeah, I look forward to seeing all of you on Monday. Be sure and catch Trendy John's broad market analysis tomorrow. He puts that out every Sunday. You can go to his YouTube Trendy Options to find that broad market analysis if you're not a part of the trendy room at Simpler. But I hope you all are. And if you're not, come and join us, spend $7 and hang out for 30 days. I think you'll fall in love. So have a great weekend, guys. As always, I will see you in the next video. Bye bye.